David Stryzewski looking at the market for us this morning. Inflation's cooling. That could mean the Fed lays off rates, doesn't raise rates aggressively. I would have thought that was bullish for the market. Do you see it that way?
Well, good morning, Stuart. I see that we've got a lot of storm clouds coming. So we're a long way off from the 2% that the Fed is ultimately looking at. And we've had these rates up here. You know, people need to remember, though, that when they raise rates, it takes on average 270 days for those rates to actually impact the economy and bring things down. But the Fed is sort of walking a tightrope right now as we might see like a hurricane showing up here. And that's kind of an interesting place to be. You know, there's a difference between a recession and a financial crisis. You know, we're sort of looking at the banking thing as that financial crisis. Is that alleviated? Not really sure. It typically takes a year for those things to develop. We're just past the first month right now. And,
so you're not back in?
We're looking at a pause time.
You're not in?
What's that?
You're not going into stocks big time at this point?
Yeah, we've got portfolios that do both sides of the fence here, so hedging is incredibly important. But no, I'm personally looking at having more cash on the sidelines here. I think that we're going to be seeing this trend continue as the summer develops, and ultimately there's going to be challenges in our economy.
Is there going to be a big drop for the market in the immediate future?
Stuart, I think that we are going to see a fast drop. You know, I vote that this doesn't happen, but we've got crises that are taking place right now. Like probably the biggest shoe to drop will be in commercial office buildings. And most people are familiar with the residential challenges that we had in 2008, but the commercial challenges that we have right now in 2023 are significant. The work from home has led to, you know, people that are not going into the office any longer. We've got challenges, of course, with the inflation. And so we had to raise rates at these significant levels. There's $1.4 trillion that needs to be metabolized here. And these local regional banks are 70% of all of this type of lending. So if these guys don't have as much cash available to them, how are they going to be able to make these loans? And what impact will that have on the economy?
Well, there's lots of different opinions on this market at this particular time. You're on one side, a lot of people on the other side. David, thanks for being here. Right now, we've got the Dow Industrials up 180 points.